welcome once again. This is Greatness speaking, and I welcome you to today's video. Like the name implies, in today's video, we are going to be talking about the secrets of buying low and selling high. You see, it's not much of a secret though, it's just an understanding of the market. Like I usually tell my students in mind-eye trading methodology, I usually tell them if you really want to trade professionally, you need to understand the fact that the solutions are in your mind, not in the market. So the mind has eyes, like the name of the trading method I invented is. The mind has eyes, and you need to train the mind to think in a certain way and train your eyes to see the chart in a certain way. So in today's video, I'm going to be discussing more of the logics behind buying and selling, buying high and low and selling high. So I wouldn't want to make this video lengthy, so I would go straight to the point now to just talk more of the logics. It's just an understanding, not much of a secret. Remember, there's no such thing as secret. They are just privileged information that we have, and we're able to find out based on research and learning from others. So it's not much of a secret, it's just an understanding. So let's get straight into the chart and talk about the logic according to my own understanding, even though I wouldn't share everything here, but I do hope, I know this video will be of help to you. Now let's start this way. You see, if okay, let's use a bullish move for example. Now this is what the banks usually do whenever they want to take positions, because they use too much lot that there are no much liquidity in the market to fill their orders. So what they do is they create their own liquidity to create just a move which is called expansion in the market, so that you can join them, then they can use you as liquidity to take profit. Now this is what I mean. If the market is moving this way, sometimes it looks like a trend, meanwhile it is a range. The market can be moving this way and people will be buying and selling and everything. Now the reason you see the market moving in this range structure is because they are creating their own liquidity. After some minutes you might see an expansion like this. Now what they did here, if they are using 1000 lot size, if they are using 1000 buys, they will open 1000 sales, so that they can at the end of the day create this expansion. After creating this whole range here with equal positions, people would join them. Some persons might think this is a downtrend based on the structure form. Some might think there are a lot of persons with buy limit here, sell limit here, buy stop, sell stop. Those people waiting for the breakout traders and the limit traders. So at the end of the day, market will expand this way. Now the big question is, when should this market retrace, or why should this market retrace? Why should this market pull back for them to continue their buy? Remember, because they have both buys and sell orders here, that means one of their positions right now is in drawdown, and which is this sell orders. Their sales are in drawdown, but their buys are in profit. And these people wouldn't want to close these sales in loss. They either prefer to close them break even or little to no loss. So why would this market come down to what we all know as the order block? Why should this market pull back? Now you must first of all understand that let me do something this way. Okay, let's just say there was another order block here. For example, there was another order block here that would eventually make the market pull back. Now there are a lot of people who join this buy. aside from the banks, and they know this area is another premium area. When I mean premium area, the market moves in premium and discount. That means when the market is cheap, at this point you buy. When it becomes expensive, you sell. And when it is cheap again, you buy. The reason for buying and selling is to get good investment gains. So nobody would want to buy from here. Everybody would be interested in buying from here, which is the low. Some person will also be interested in selling from here, which is the high. Now, why should this market retrace? Why not continue going up? Why not continue going up? Why should this market retrace at this point? Because the banks are in drawdown. They would even join this sell just to push the market downward so they can close all their sell positions. So some retail traders will also join the trade here. Remember, some persons who took this buy are taking profit here. And when you are taking profit, you are indirectly opening a sell position. I don't know if you understand that. Whenever you take a profit, you are opening a sell position. There are persons willing to sell here. There are persons taking profit here. And there are persons opening new orders here, including the banks. This happens on every time frame. So the reason this market will retrace is simply because the banks are interested in this area because they want to push it. Other traders are also interested in this area because they want to sell. Other traders are also interested in this area because they want to take their profits. So what the banks will do is they will join and push this market downward. Now notice what is happening. It is now what? A downtrend. This is a complex pullback, and this might be on another time frame. This might not show this way on the current time frame. This might be, if this is a 2-hour time frame, this might just be a 15 minutes time frame showing this is a downtrend. Remember, now that it is showing a downtrend, something is happening. There are people, the breakout traders have buy stop here. You get, the limit traders have buy limit here. And there are persons who currently think this is a downtrend. Their take profit is not even here. Their take profit is below this way because this is a downtrend to them, are not knowing this is an uptrend. In fact, they know it's an uptrend, but because of these waves, they are like, okay, it's going to break this area. At least a new trend has started. And for that reason, what the banks will do is, their goal is to come and, first of all, close. They have two goals in mind. One, to close their sales that are in drawdown. To close those sales in, let me get this to, okay. To close those sales break even or little profit. Second goal is to come and take out the breakout traders that have sell stop here, hoping that once the market break this zone, it will continue selling, they will be in profit. To use them as liquidity. Secondly, to also come and take out the traders with sell limit here. That is why most of the time you will see the market, instead of reversing from this other block, you would notice it will pierce it and induce that other block. And induce that other block that you have. That's why you usually get stressed out. I've learned smart money concept. I was told it's the best strategy or the best concept. How come the market is always hitting me out? Or why is it that it is that other block I choose to trade that the market is always coming to haunt? That is because that is their intention, first of all, to close all of their sales, break even on little profit, so there will be more volume for the buy. Secondly, to take out the limit traders who have buy limit here, so the market might just pierce it down a bit to create liquidity, which some person call fake out, and the next thing it will start going up. Or they don't only want to take out the people with sell limit, they also want to take out the people with sell stop and then the buy stop that are here. You know, most of the times the people who are here, their stop losses are here. So what they will do is they will just do it like this and bring it down, then it continue upward. They just want to take out everybody in this market and create liquidity for themselves to move higher. It's as simple as that. That is the logic behind this whole. I wouldn't say this is what I can give right now. There are a lot to this, but this is what I can give right now. It is the logic behind. Maybe in another video I will explain more of this. I really don't want to make lengthy videos anymore. So the same for the opposite direction, which is the sell. This is an example of buy. The market moved in range. First of all, if you understand range structure and Wyckoff, you should understand what I'm talking about. After moving in this range, it is not much of a big deal here. It's just people, like I usually tell my students when back testing, have it in mind that people are exhibiting behaviors which will later turn to history. That's why you always hear that history repeats itself. These are people exhibiting behavior. So when backtesting, always see what people are doing and find a way to join them. People and banks and institutions and everybody, they are just here trying to this range. There are persons who know how to trade this range and they are making money. There are persons who know how to trade this first move, while there are persons who are ready to trade this second move after the banks must have created the footprint, which is this expansion phase. So there's not much of a big deal here. This is just volume being accumulated here. This is just orders being accumulated here. This is just people having so much orders here, and first of all using those orders to take out the persons that are having their buy limit here, sell limit here, and with the intention that they will later come and take out the ones with sell stop here or even buy limit here. There are persons who would use here as their buy limit, and the market will take out this area, induce it, then come and trigger this inefficient imbalance. Inefficient order block. Like this area has not been mitigated, so this can just use as liquidity to tap into this area, while the ones here will be in loss. The ones here will probably also be in loss. There are persons who also have their own sell limit here, hoping or thinking that since this wave is moving downward, this would be used as liquidity to trigger them in and go down. Meanwhile, while saying all of this, you are not wrong. Don't get me wrong with what I'm saying. You are not wrong. This is just an intent, and this is just what these people have in mind. You placing your sell limit here does not mean you are wrong. The market, you are supposed to even make profit by doing that, because the market is in a downtrend, as you can see here, trying to complete this pullback, and you have your limit order here for you to get triggered and continue. According to order flow, that is supposed to be a nice trade, because when order flow becomes too much in the market, you need to understand that there are areas that these people tend to break the rule of order flow. When market is moving with impulse correction, or the other way around, impulse correction, it will be too balanced for them to trade. So they need areas to violate some of these rules for them to make quick money, and violating them means them creating liquidity for themselves. So you having a sell limit here does not mean you are wrong. You are right, but the market chooses to do what it wants to do. You also having a sell limit here according to structure break and every other thing and imbalance, you are not also wrong. The market just chooses to do what it wants to do. That is why I have here observe, understand, execute. You just need to observe what is going on, understand it, and execute. If your observation is telling you, okay, this will serve as a primary liquidity for this secondary zone, fine, you take your order there. If according to your observation and understanding, this is the area the market tends to turn, fine. It does not mean you are wrong. Don't kill yourself or be angry with yourself saying your strategy is not good or that. You just have to understand this is the fractal nature of the market. The same for the opposite trend. Let me see if I can quickly draw something for a sell right now so that I will end this video. Okay. Okay. Okay, for the sell. Okay, this is it. Market was in an uptrend and suddenly it started seeing something like this. Note there is a break of structure here. A lot of people will start placing their buy limits here because there is a break of structure and this is the next other block that the market should buy from. But the market did something like this, induced it a bit, moved up, and before you know, the market is now in a range, just playing around this area. And some persons will stay up this trade until something like this happens, until an expansion happens, an expansion takes place. Then there are persons who actually caught the first move here based on this primary liquidity that was taken out, and it got to the secondary liquidity, like secondary zone, which pushed it downward. If I were to be in this market, I should be able to catch this move. Now some person joined this move here, which is very fine. Now what is the next thing the market is supposed to do? What is their intention? Remember, they have both buy and sell orders here. That was how they were able to create this range. That means their sales are in profit now and buys are in loss. So they would have to look for a way to close this buy, break even or with little profit, and in that way they would have to come back and finish the journey they started. So that means they're coming back means they will have to take out a lot of liquidity. They will have to take out a lot of orders. The orders by retail traders, some are here, some are here, some are here, some are within this zone, because the market, why it doesn't just move down this way. Why going this way? It must have created something like this before going up. That means it creating something like this before going up means there are persons also who would have here to be their other block where they want to sell from. So in that means, in that way, the market will also take out a lot of liquidity here before getting to even this area and so on and so forth before moving downward to finish what they started. So this is how I'm just trying to build an understanding in your mind. I'm not telling you the market works this way 100%. This is just a pictorial representation. This is not the chart. This is not the market. But it is just building an understanding in your mind for you to know that yes, this tends to happen. This tends to happen. You just have to backtest and understand the daily cycle, how it moves from session to session, and how you should take advantage of some of this move. If time permits me, I would love to just check through the chart and see if I can show you something of such I'll be talking about. Okay, it happens all of the time. Okay, let's start from here. Okay, let me get this tool. Okay, now this is what I'm just talking about. You see what the market did? The market started in a downtrend, then was now in a range, making all of this move up, down. Even the range sometimes looks like a trend on lower time frame. Then there was an expansion phase, then it created a little high here for you to want to take your order from. Then it went up to the zone, and you can see the pictorial representation is more of different thing from what I'm drawing right now. That is because the market, what I drew is just a picture. This is exactly, the market can choose to do whatever it wants to do. Now this is the range, this is the first expansion phase. Then the market went back to close their buys that are in loss before continuing the sell. So you can see what did they do here. They took out a lot of traders here, down to the people trading this other block. They were taken out. Down to the people trading this other block. They were taken out. Except the ones who like to take their stop loss to this way. But if you are trading this other block properly, they were taken out. The people who has buy stop here, they were also taken out, except they took profit within this range of few pips. They didn't want to hold for some time, but there are persons actually holding. They were taken out also, and so on and so on and so forth. That's basically how this market works. The same, you can see the same range here. It was broken, then the market went up, and before all of this move started happening, it works almost all of the time. The same thing happens here, and I don't know what's the time now. I really don't want to make lengthy videos anymore. How many minutes have I spent? I really can't figure out that now. Okay, that should be the end of this video. I will discuss more on it in our next video. You can see the same thing is about happening here. The market is trying to create a range at this point. You can also see the market created a range at this point. That is basically how it happens. Now, you might be surprised to know that the range that was created at this point here right now was just to cause this expansion phase. The market will come back to retest any of this area, and it will continue to go down. Now, while I just highlighted this range, if you go on lower time frame, this range did exactly the same thing. How I wish I have enough time to start showing all of it. Okay. You can see inside that same range we have the same move. We have the same move. You can see this was a range, though I took the sell. This was a range, and it did the first expansion, which was this candle that came down to a fake out candle, yeah, to take out some of the other blocks and everything that is here. Then it went up to take out all of the sell limit traders and buy stop traders, and it came back down. You can see trying to just find out. Now I'm showing you all of this within this range I marked from the higher time frame. So within ranges, there are ranges inside of them. Inside a structure, there are structures. Inside another block, there are other blocks. It is just the same thing in every time frame, but being represented in different ways. So you need to understand time, price, and volume. Okay, that should be all for now. See you in my next video.